SLs, it's Ms Palekar again. I was looking at accounts and finance, and I just happened to realize, why don't I just put up a quick video, just like what I did for break even, and then explain it through. Okay, so if we were to go to 25.04, where Tim Bennett actually introduces to you profit and loss account and balance sheet. Now, profit and loss account is relatively, self-explanatory. I don't see you guys really having doubts with profit and loss account, but for balance sheet, quite a few terms here which are pretty new to you, and hence the quick decision to record this video. Okay. So based on what Tim Bennett says in his video, let's take an example. How much are you worth? How would somebody know what Mark Zuckerberg is worth as of today? What's his net worth? So all you have to do is, what does he own? What does he owe? And that gives us what the net worth is for Mark Zuckerberg. So using the same philosophy, we're going to embark on writing balance sheets. The own funds are nothing but what a business actually owns. So what it owns are its fixed assets. Okay, so I'm going to take you through how you write it later on. But some examples of fixed assets are buildings, machinery, vehicles, furniture, fixtures, fittings. So these are all the examples of fixed assets which a company, like in this case Mark Zuckerberg, owns. Okay? There are also some current assets that a business actually owns, and that would be explained later. Okay, so you basically look at what you own, which comes from fixed assets and current assets. So you see there is no bracket. When you put a bracket, that implies it's negative. So these are what you actually own. They are your own. They belong to you. But you can't run a business with just your own funds, with your own assets. You need to borrow from somebody at times. Okay, so I'm sure Mark Zuckerberg owes a lot to banks and others. So what you owe, I like Tim Bennett's explanation, and therefore I've selected that, and I don't want to confuse you, so we'll base it on what you will be watching in 25.04. So what you owe, what a business owes, would be classified into two. One would be, what does Mark Zuckerberg owe in the short term? When you say short term, that's less than a year. So another word for that would be current liabilities, which I'll explain later. So first let's get this correct. So what he owes others would be in the short term, that's less than a year. And in the long term as well, he owes somebody, and that would be, mortgage or debentures and the like. So that's long term, which is something that he owes to people or to institutions, which extends to more than a year. So that's why you see what you owe is written as a bracket. It's negative. So you add this up and you subtract this to get your net worth. Okay, so if you have to understand this correctly to be able to understand the actual balance sheet. Okay, so just to recap, what you own minus what you owe gives you your net worth. So I'm going to take you to the next level here, which is, I hope you can read my handwriting. So from a business perspective, what you own that you see here, I'm going to use perhaps green to reinforce what you own. So this is what the business owns, fixed assets and current assets. You add them up, you get total assets. Okay. Now what you owe, what the business owes, the language that we use, we don't say short term, long term, less than a year, more than a year. We use specific accounting jargon here, and that is current liabilities, which is nothing but short term. Current as in short term, now, which is less than a year. So you can associate like that. And you've got long term, that's greater than a year. So that's long term liability. So you add the assets, fixed and again, current assets are something that is there, which is going to mature within a year's time. Therefore, you call that current assets. All the assets you add up, take out all the things that you owe, short-term, long-term, which is called in accounting language as current liabilities, long-term liabilities. Okay, so that's how when you subtract what you owe from what you own, you get your net assets. So you've actually, so what's the balance sheet? You're trying to balance two sides. They have to be the same. Okay, so we've got one side of the balance sheet. We don't do the vertical format, although in a few countries they subscribe to the vertical format, but we only use in IB and in A levels we use the horizontal format. So you've got one side of the balance here. It's like a weighing scale, if you can imagine. Okay, so you've got one side of it, which is told by this story. It looks very difficult, but it is not. Just go by what you own, take out what you owe, you get one side of the story for the balance sheet. Where did Mark Zuckerberg get the money for his, when we say that he's worth this many billions of dollars, but how did that money come about? Where did he get that from? Well, he got from share capital, retained profit. Okay, this is all that you need to know. He would have got from somewhere else, but for your exams, for your syllabus, we'll only confine ourselves to these two. So that's how you balance it. So these two should balance, even in exams. Excuse me, even in exams, it has to balance. That's your aim, okay? So this should be the same as that. That's why I've used a circle there. So now let's come to the actual stuff that you need to know. This is going to be a bit overwhelming, but don't feel overwhelmed, okay? Just going to bring it a little bit closer, sorry. Okay, so this is your format that you have, I think. Let me just go and check. In Final Accounts Explained. So if you, oh no, not that. Is it exercise? No, let's go back to introduction. It must be Final Accounts Explained. So you have balance sheet. Yeah. So this is where I'm. So if you were to click 25.0, it's nice to have you logged into Canvas while you're watching my video. It makes sense. Okay. So 25.04, and you click Final Accounts Explained, and I'm in this balance sheet. The same example that I'm using on the board. Sorry, you didn't get to see, I think, anything. That's okay, but this example that you see on the board here is the one that's there on 25.04, Final Accounts Explained under balance sheet, okay? All right, so you take, so in exams, you will be getting this and not all that. So therefore, you need to know this, okay? So the fixed assets will be given to you. Somewhere in the question, you'll be stated depreciation. Now, what is depreciation? When you buy an asset, if you buy a car today and its life is for 10 years, obviously the value of the car has decreased. Okay, you've used it. So that is depreciation. So when you show, like today, if you bought the car for $10,000 and after 2 years you still show $10,000, that's not correct. Therefore, you need to bring down the depreciation amount from that car's value that you purchased at $10,000. So you've got to show the correct value in your balance sheet. You can't depict a false story. So fixed assets take out depreciation. That's how you get net fixed assets. Okay. Current assets usually are only 3 for you. Okay, so don't go overboard in learning anything more than this. Cash is the most liquid of all current assets. Okay, it's like the lifeblood of a business. Followed by debtors. Who are debtors? Debtors are the organizations that owe the business money. So you expect money from them. So they're an asset to you, but they're current assets. The language for current assets is what we just looked at here. Anything less than 1 year. Okay? Let's go back to this. So you've got cash, debtors and stock. So you've got all the total current assets. See, 10 plus 12 plus 35 gives you 57. Going back there, 500 minus 20, you got 480. You know how you got that. So 480 plus 57 is your total assets. That's your own. So in our language, going back to this example here, see there? You can't see it. Own. That's what we have got so far. So if you were to look here, we've just done this bit. Fixed assets plus current assets, total assets. That's all I've done so far. Okay. Now I'm going to take out what I owe, which is current liabilities. So some examples of current liabilities are bank overdraft, which you would have studied in cash flow forecast. Otherwise, just know that bank overdraft is something that a business actually borrows from the bank for less than a year. So these are all less than 1 year. Okay. Creditors, to whom the business owes money. You see here, when you overdraw your account, you're liable to repay back your bank. When you purchase from suppliers on credit, you need to pay them back. So therefore, they're called creditors. And if you have any other short-term loans, all that sits here. So in this example, 5 plus 15 plus 22 is 42. Now remember, I said anything that you owe, you have to write in bracket. I've just simplified it. It's the same format, but I've simplified it so you understand it better. And then you've got long-term liabilities as well. Again, you owe. Anything you owe, put that in bracket. So negative 300 in that example. Now it's a matter of balancing. So we're reaching the end of it. Okay. So what do? This is where you really need to pay attention. What I've done is, I've added these two. 480 plus 57 is 537. I've taken out my first thing that I owe, that's current liabilities, which is negative 42. I've taken out what I owe long term, negative 300. So I've got 195. So one part of the story, I've already got the answer. 195. Now my aim is to balance it. How do I balance it? Where did I get the money to own all these? Well, I had share capital 110, retained profit 85, so my equity was 195. So you see that my balance sheet balances. Okay, this is all there is to it. So to understand this, I urge you to watch Tim Bennett's video. Whilst you're watching, just the last bit, there's more of his introduction of the profit loss account and balance sheet, but just this bit is extremely important. It just simplifies it. Then you can look at this bit, how it's expanded. Yeah, this is not there in Tim Bennett's video, so it helps to look at this carefully. I might just go a little bit back. Okay, all this I'm sorry, I'm not able to balance it, focus it. And then you've got the third section, which I just explained. This was the one that you already have access to in 25.04. So it's a long video, but I hope that it pays off in you being able to understand balance sheet. So if you still have doubts, let me know. We can Skype or use Google Hangout. Okay, thanks, bye.